Hey, money marvels! Welcome back to Finance with Ronke, the channel where we break down personal finance, saving, and smart investing so that everyday Nigerians can build real wealth. I am Ronke, an ex-banker, chartered stockbroker, and investment banker. My passion is simple: helping you take control of your money and make it work for you. If this is your first time here, I'm so glad to have you. Don't forget to hit that subscribe button and turn on notifications. If you are a returning subscriber, thank you for always showing up. Now, let's get into the business of the day. If you have been looking for ways to grow your money in Nigeria without directly trading stocks, then this video is for you. Today, we are looking at 6 high-yield mutual funds in Nigeria that have delivered impressive results so far this year. But before we dive into the video of this today, this is a disclaimer. The videos and opinions shared in this video are based on my personal research and analysis. Please do your due diligence before investing, and remember that past performance is not indicative of future results. Always consider your risk profile before making decision. So let's get right into the video for today. So the number one on my list of the best high yield mutual funds that has done so well, that have given the highest returns in this year from January to date is ARM Aggressive Growth Fund. This fund invests mainly in equities. That means it is designed for people with a high risk appetite. The goal is to protect your money against inflation and grow it over the long term. Even though it is high risk, the fund reduces some of that risk by adding fixed income securities into the mix. The year-to-date performance of this fund is 50.99. So what it means is that if you have a 1 million naira in the fund from January to date, your 1 million naira would have become 1.5 million naira, which has way beat inflation. Inflation has been over, and on the average from January to date is about 20 something, and this fund has given 50% of your fund. So it has edged against inflation, and the minimum investment you can start with is 5,000 naira. So if you can handle some ups and downs for long-term gains, this one is to be considered, as the risk level is considered to be high. Then the number 2 on my list is ARM Ethical Fund. This fund is for investors who want their money to align with ethical values. It avoids industries or companies that don't meet certain moral or social standards. Some people, they don't like to invest in breweries. Some people, they don't like to invest in hotels. So this fund will help you to be able to will help with funds that aligns with your moral values, and it is suitable for long-term investors who want growth but also care about principles. So their year-to-date performance is about 59.88, which is roughly about 60%, which means 100,000 that you've put into the fund from January would have done 160,000 naira. And you know, when it now bring into compounding into place, it will have done much more. The minimum investment you can start with is 5,000 naira, and the risk level is considered to be high. Number 3 on my list is Stanbic IBTC Balanced Fund. Now, if you want a balanced mix of high risk and low risk investment, this is your option. It combines stocks and fixed income securities like treasury bills and commercial papers. The idea is to give you growth from equities and stability from fixed income. This fund has done over about 62% year to date. It has done 62%. That means a 1 million naira invested in the fund would have yielded 1.62 million naira, which is a profit of over 600,000. And the minimum investment you can do in this fund is 5,000 naira. It is a great option if you want a diversified portfolio without doing all the work, as the risk level is considered to be medium. The number 4 on my list is Paramount Equity Fund. This is Nigeria's oldest mutual fund. It's been way on for a while. It invests in a mix of high quality equities and fixed income securities. The goal is simple: steady growth and what? And consistent income over time. It has been able to give a performance of about 66.01% year to date, which means a 1 million naira invested at the start of this year would have yielded would have 1.66 million naira in your account by now. And the minimum investment you can start is 5,000 naira. And if you are just starting your mutual fund journey, this one offers a good balance of history and performance. And the risk level is considered to be medium. Then the number 5 is Stanbic IBTC imaan fund. This is an Islamic mutual fund designed for investors who prefer Sharia compliant investment. It avoids businesses like alcohol, tobacco, and gambling. The fund invests mostly in Sharia compliant equities and sukuk bonds. The year-to-date performance is 131%. You can imagine that, despite not even going into some funds, some kinds of investment. That means if you had 1 million naira in this fund in January, by now your money will be 2.3 million naira, a 131% increase year-to-date performance. And the minimum investment is 5,000 naira. The fund has performed strongly while staying true to Islamic investing principles, and the risk level is considered to be medium. And the last on my list, which is the number 6, is Alo Equity Fund. This one is managed by Alo Nigeria Capital Management Limited. It is focused on high risk, high return investments in equities across different sectors. The fund also invests in short-term money market assets to balance things out. And it is designed for retail investors, high net worth individuals, and institutional individuals. The year-to-date performance of this fund is 140%. I kid you not, 140%. 100,000 invested in the fund in January is now 240,000 naira. A 1 million naira invested in the fund is now 2.4 million naira. That means you have a profit of 1.4 million naira just by putting your money in this fund. And of course, you can start as low as 5,000 naira. So this one stands out for a strong returns, but remember, high return usually means high risk. So how do you invest? If you are ready to start investing in mutual funds, here is how to go about it. Number 1, pick a fund. Choose the one that matches your risk appetite and goals. Do you have a high profile for risks? You can go for the equity fund. Or if you want a balance mix, okay, I want a bit of risk and a bit of return, so you can go for the balanced one. And if you don't want risk, just avoid equity funds. If you're a low risk person, avoid equity fund. So you pick the one that matches your appetite and your goal. Number 2, open an investment account. You can do so by going to the company's website or to their office, and some of them, they have apps. You can invest through their app. Then the third one is check the fund fees. Look out for the management fees and the entry fees. Don't ignore those ones. Check it and be sure that they are not too high for you, and then you compare it and then you go for the best one. Then number 4, fund your account. Confirm, deposit money into your account, and once you have funded it, then you select your preferred fund. You confirm the investment choice that you want to go into. If you are using the app, you choose, or you do a mail to your fund manager. If you are, maybe they have a web portal or through email, so you select your preferred fund. And then lastly, invest consistently. Keep adding over time for better growth. This will not put into consideration compounding interest, and then you even have more than what you've even bargained for. So mutual funds are one of the simplest ways to invest without needing to pick individual stocks. Just remember, higher returns come with higher risks. So always choose based on your personal goals and comfort level. Thanks for watching. If you find this video helpful, don't forget to like, subscribe, and share this video with someone who is thinking of investing in mutual funds. Please, if you have any money question you want me to address in my next video, kindly drop it in the comment section. Remember, This is Finance with Ronke, where your money learns to work for you. Until next time, stay smart, stay consistent, and keep building wealth. Thank you, and see you in my next video.